Hello friends, this is Raj Sastry from Raj Option Trading. Today is June 26, 2021. I want to cover heavily shorted stocks and how to benefit from it. So with that I got few names here. Top on the list is Agora, API, Chinese-based software company. Very high short ratio, 52%. We got AVAH, again high short ratio. CARV, again same story, high short ratio, 49%. Then we got PubMatic, EHang, and so on and so forth. And I also indicated here where there is a insider buying going on. For example, AVAH, there's a insider buying going on. That's why it's in the purple letter. And then you got PubMatic, it's in red letter here. There's a insider selling going on here. Sometimes insider selling could be okay. It could be option exercise or something along those lines. Not a big deal. And same story here, Workhors, some insider selling going on. Support, there is some insider buying going on. So with that, let's jump in and look at some of these stocks and see if it's good to buy them at this point. So let's look at the headlines quickly. As you look through here, the first is really meme-based investing is totally nihilistic and parody of actual investing. So this is where folks are thinking this could be one of the bubbles going on in the market. And next is June 24th, we got Forget AMC and GameStop, new stocks that Reddit's Wall Street Bets is buying. So this is where even Reddit, as you know, they kind of go between multiple areas. Sometimes they like AMC and GameStop. Sometimes they'll go with things like clean energy, workhorse. This is where really our job is to really look at what's really selling off and still has high short interest. And if you want to buy, that could be a good idea to buy. But if something is really crazily high, you might even look at either shorting or buying some put options along those lines. So that's where we can play this game a little bit versus buying when the stock price reaches high. That's typically not a good idea. Then we got hedge funds are rethinking that their tactics. They got hit by $12 billion here with the meme stock army. Also folks are thinking Wish, take a symbol Wish. It's not like others. This is where I think Fool.com, they seem to be liking this Wish. Alfie shares tumble. Torchlight also sinks. No end to whiplash of meme stocks. I think Wish. I think looks like folks are liking this company a little bit. And forget Dogecoin. Some of these stocks like PubMatic, SEISRG, they can make you really rich. So this is where by looking at this headline, you kind of sort of know what's going on. There is opinion both sides around meme stocks, and our job is to really look at what makes more sense. Where can we profit from this whole meme saga that's going on? So with that, let's jump in and look at this heavily shorted stocks. This is page 1. So the way this chart is organized is I got a ticker symbol here, the company, the price, market cap, and sales growth is very important. We got to look at nice, strong, fundamental companies. All the companies with a positive quarter-over-quarter sales, I've highlighted them in bold, so you can look at those. Those could be your safer bets. But then I also have highlighted in green background here. As you can see, few stocks are in green background. That means it may be okay to buy a little bit at this time, given the stock has fallen off drastically. So with that, we talked about the sales, very important. Sales growth is very important. We got to make sure there's a nice sales growth. Next is the margin. We got to make sure there's a nice gross margin. Net margin, sometimes it's okay if it is not there. Early stage companies, they cannot show a net margin. But as much as possible, it's good to look at companies with nice gross margin. It's not always possible. Then we look at debt to equity ratio. So we don't like to have too high debt to equity ratio. That tells you companies taking on too much debt. As an example here, Carver, its debt ratio is 1.3. That's a little bit red flag for me. And same is the story with the SmileDir, high debt here, and GEO, same story here. Sometimes it may be okay depending on the industry, but typically it's a red flag when there is a high short ratio. high debt to equity ratio. And then you got ROE that tells you the profitability of the company. In some areas, for example, PubMatic, it's already profitable. And as you scan through this, wherever you see positive here, Fulgent, same story. SENS, again, this is also, there is a positiveness here. Very small sales though, that's why numbers are a little bit bloated up. And then we got last one here, HUYA, same story, positive ROE. RSI is very important. RSI will tell you, is it good time to enter into this stock and buy some position at this time? Anytime RSI is above 50 or 55, probably it's not a great idea unless you're a long-term investor. It's not a good idea to buy at the time. But if the RSI is below 50 or 55, then it's okay to enter into the position and buy a little bit. As an example, as you scan through this list, stocks like API, CARV, and as you scan through here, we got Tattooed Chef, and as you know, again, YALA. Some of these could be okay to enter at this time, given RSI is below 50 or 55. That tells you stock is relatively oversold at this time. It's okay to buy. Then institutional ownership, it tells you the big institutions are they buying into this stock. Whenever you see a high ownership ratio, that tells you the big institutions are really supporting these stocks. So there's a good support level for this company. Then, of course, short as a percentage of float. This is very important for this discussion. We want to look at high short stocks here. So we want to benefit from highly shorted stocks and really go from there. In this chart, we got the stock at the top here. API has got highest short ratio, and from there onwards, it's decreasing, as you can see here. Price to sales ratio indicates is it too expensive at this time or it's not expensive. As you can see here, we got 100 plus in some areas like Clover, Workhors, and FUV, and so on and so forth. You got to be a little bit careful here. Don't buy at the top. It's okay to buy when they're when they dropped off or pulled back. Of course, next is really performance. We got to really see how is the performance doing. If there is a high short interest, if the performance is really, really great in 1 day, 1 week, 2 week, you would wait for it to cool off a little bit. You would not jump right away. On the other hand, if the performance is dropping off in last, say, 1 month, 2 week, 1 week, and 1 day, that's where you jump in and buy some and wait for a while for a nice profit. Then we got performance 5 years. It tells you, even in a 5-year longer time frame, how is the company's performance. For example, here CARV, nice performance even in the 5-year, and Workhors and BEEM. It tells you these companies will do well. If there's a temporary weakness, you could buy some and hold it for a while. And last but not least, how much this stock is off from 52-week high. If there is a stock which is already near 52-week high, as example, AVAH, you'd wait a little bit for a pullback, then buy if you're looking for a short squeeze. So normally that's a good idea, and we can go from there. So with that in mind, let's jump in and look at few stocks. I will cover a few of them and give you a general idea. Then you can look at these and see what makes sense to buy at this time. First is API or Agora. It's a Chinese Tulio. It's a great stock. It's a $41 stock. Nice gross margin. I love this gross margin. Very low debt here, as you can see. 0 is the debt to equity ratio. They're not still making profit. RSI, ROE is negative. RSI tells you it's okay to buy at this time. Good institutional ownership here. And as you look through here, they're down for 6 months, 3 months, 1 month, all the way to 1 day. In 1 week, they showed some positive indicator here. It's up 5%. So with the stock like Agora, as it's falling off of late, with a high short ratio, and there's a nice gross margin, 62%, and companies aspiring to be this Tulio of China, I would put some money into work here, and this is the time to buy such stock, given it's a high short ratio, company doing okay, and then wait for a while. Next we got Aveanna. This is really insiders are buying here. As you scan through this year, company is really not doing that great. I think it's a newer company. As you can see here, there's nothing beyond 3 months here. So, because it's a new company, there is not too much history, and insiders are buying it, even though it's a near 52-week high. You could, take a leap of faith and buy some on the down days. Typically, that's what I do also. In this case, the stock falls off, for example, say next week, Monday, Tuesday, a little bit. I would buy some and give it a chance. And if it falls off further, I might buy a little bit and give it a chance and see how it does. Then we got a couple more here, CARV. And as you scan through this stock here, gross margin is 0. There is nothing much here. And they got, sales growth is single digits, which tells it's okay. It's not a dead stock at this time. And as you scan through here, they got a little more debt going on. And if you look at the performance here, they've been dropping off since 2 weeks. And one day, also they dropped. 1 week it's positive. In these type of scenarios, given the stock is off 43% from 52-week high, and there is no, the sales growth is positive, single digits though, there is no gross margin, I would normally give this also a chance and buy some and keep a watch on this and how it goes, see how it goes. And if it bounces nicely, I may take half of my position off. If it falls off further, I might add a little more. That's how I kind of play these type of stocks and go from there. And then we got PubMatic. PubMatic, we got some insider selling going on, indicated by red font here. But overall, as you can see here, these are done nicely for last 1 month, 2 week, 1 week, and 1 day. And is off 45%. In these type of scenarios, I would not jump in right away. Given RSI 63, that tells you, hey, use some caution here. It's been going up of late. So I would wait for a little pullback. It's a good stock to buy on any pullback and go from there. Even up here, I think it's okay to buy, but I would rather wait a little bit, let the stock come down, and then go from there. Then we got EHang. It's a China-based aviation type company. I think they are doing nicely. $39 stock here. And as you scan through this year, RSI is 62. It tells you, buy moderately. Don't need to buy too much. And as you scan through here, stock has been doing pretty nicely for last 1 day, 1 week, 2 week, 1 month, and even 3 months, but it's off 69%. In this type of scenario, I would wait for a little pullback here and buy. If you want to really buy this for long term, you could buy at this time, but I would rather buy for a moderate pullback here and then buy. Clover Health is one of those favorite meme stocks, has been going up and down all over the map. So $12 stock, as you can see here. And as you see here, there's nothing to show off here. They don't have gross margin, they don't have net margin. They have $35 million sales trailing 12 months and very high valuation. But as you scan through this year, they're down 55% from 52-week high, and they're also down for 2 weeks, up for 1 week, down for 1 day. So I would buy a little bit at this time. Clover being such a meme stock, I think concept of this company is good. I would buy a little bit and wait for a short squeeze to happen. Clover typically gives you short squeeze. Lee, Chinese automaker, high short ratio. Company has been doing nicely off late. RSI 69. I would not chase at this here. I would wait for this to cool down a little bit. Then I will buy. Normally, stocks like Lee, there are down days as usual. I would not chase here. I would wait for a small down day. Workhors, I've been buying it in the past. It was such a dog stock while ago. Now it's kind of getting its groove back, as you can see here. Done nicely in 1 day, 1 week, 2 week, 1%, still down 64%. Same theory applies for Workhors. It's a red here because insiders are selling the company stock. But I would wait for a small pullback here. Given RSI 60, it's okay to moderately buy, but I would buy on a down day here because stock has gone up off late nicely. Support.com, it's an interesting play. We got insiders buying the company stock at this time. $4 stock, as you can see here. RSI is 56, which is a little higher for me. I would rather have RSI below 55. But as you scan through here, up for 1 day, 1 week there is nothing much, 2 week they're down. That tells you companies really trying to search for direction here. I would buy this company also on a down day, given it's a very low valuation, $96 million company, very small company. I would buy this on a down day and accumulate slowly. So we got a couple more as you scan through here. Tattooed Chef, $19 stock, has been going down of late. I would buy this also on at this point and accumulate slowly. And we got a couple more EVFM insiders are buying here. Senseonics, I think insiders are selling here. Red, GEO insiders are buying. HUYA is one of those stocks. I typically buy this on a down day and accumulate slowly. So with that, this is page 1, and then you got page 2 here. Similar thought process here also. I would apply same principles here. As you scan through this here, we got Root. Root is one of those insurance companies, $10 stock. It's again one of the favorite Mimi stock. As you scan through this here, they're down for last 6 months, 3 months. They're up for 1 month. Now they're down for 1 day. I would buy this on these type of down days here, accumulate slowly. I mean, there is nothing much to show here. They got some sales. There is no sales growth. There is no gross margin. You could you're basically buying it by looking at the sales growth and the company and the short interest here and wait for a short squeeze. GoodRx is one of my favorite companies. I would accumulate this company at this time. They have got some tough comparison or tough competitors with the Amazon also in the online pharmacy business. But I would think it's good to accumulate slowly. As you can see, a stock has been falling off in 2 week, 1 week, and 1 day. I've been accumulating this stock slowly. I think this will turn out very nicely. Washington, you got to be a contrarian here. They have nothing to show off. They got some sales here and they're down 86%. They're down all the way from 1 year. I think they're done okay 3 months and 1 month, but they're down now. So if you're a contrarian, if you're willing to lose some money, I think it's okay to buy some. This can give you a short squeeze, but you have to probably wait a little bit and take it from there. So you can look through other stocks here, a couple of areas like ATAS, NKLA, Nikola, Oric, OOF. There is some insider selling going on. Nikola, also you got to be a little bit careful here. It's a EV play. They have no sales, a lot of promises for the future, high valuation. So just make sure you're buying it on a down day. We got one more chart here. We got same thought process here. Skills, one of the favorite Mimi stocks here. A $20 company. It's a great company. Insiders are selling, as you can see by a red font here. And as you can see, your company has been doing nicely off late in 1 week and 1 day. They're down 56%. I would buy this company slowly, accumulate, and wait for a nice, nice bounce back here. RSI is 56, tells you moderately buy, don't need to buy a lot. Carvana, on the other hand, I would wait for a pullback. RSI is 65, insiders are selling it, and I would wait for a pullback here. Company's stock is almost at 52-week high. Then we got Fisker. Fisker is $19 stock. Insiders are selling it. Not a huge red flag, but we got to watch out here. High valuation. I would probably wait for a pullback here, given RSI 66. As you scan through this, GBT Global Blood Therapeutics, low RSI 40, and stock has been, down for a while now. I would buy this on this down weakness and hold it for a while. Next, we got one more chart going on here. Same methodology. As you scan through this here, the purple ones are where insiders are buying, and the red ones are where insiders are selling. And I would quickly scan through the RSI here, and don't go and buy when the RSI is high. Instead, look for candidates like ZOIP, PEI, and even Saber for that example. Look for the areas where RSI is low, even ATER, and look for the signs where stock is trying to recover in the shorter term, but it's been off for a while, and buy in those scenarios. And if you're a short seller, look for scenarios like here, surgery as an example, and it's a $67 stock. Stock has been doing nicely. They're almost at 52-week high right now. In these type of scenarios, you could slowly try to think about buying some put options, or buying, shorting the stock. But if you're shorting the stocks, also make sure you buy some deep in the money call options so you don't get hurt too much. So with that, let's jump in here and look at few companies in a little more detail. So API, it's Agora. It's a real-time engagement platform. It's RTE platform as a service in People Republic of China. It's a software as a service type play here. They provide software tools for real-time video, voice, messaging functionalities. And as you scan through here, earnings per share is negative. That tells you company is not making money, which is okay for these early stage software companies. Sales is going up. I love to see sales going up. That's a great story. And shares outstanding is coming down. That's also good. And from a news perspective, there is some positive news here. Agora's real-time engagement platform is now embedded in HTC. They work with HP, and good news here. As you can look through here, the stock dropped off because they had some wider than expected Q1 loss. That's one of the reasons stock dropped back in May 25th. And from a fundamental perspective, I think they got nice sales here, $138 million. Nice gross margin. I like that. Debt is very low, as you can see, just $6 million. A lot of cash on the balance sheet. And as you scan through this here, high float short ratio here, and a little pricey from a price to sales perspective. From a valuation perspective, not too bad. Stock has been dropping off of late. That's when I like to buy some and hold it for a while. And nice trading volume. I like this trading volume here. For 1 day as well as 3-month trading volume is good. You can get in and get out nicely. Nice cash, low debt. Free cash flow is negative at this time, which is okay. They're spending money on R&D. That's also good. And as you can see here, they're down from 20-day moving average and also down from 50-day moving average. And they're also below their 120-day average price and also 200-day price. I think that's where stock is kind of trying to stabilize at this time. I would buy some at this time and hold for a nice bounce back. From a technical perspective, as you can see this chart here, I think they've done nicely back in right here. As you can see here, 2021 February March time frame, stock caught fire. Then they came down here. Now they're trying to see which way to go. And as you see here, RSI is kind of stabilizing. That's good. From a implied wall perspective, 65.7. So if you're a put seller or a premium put option seller, you could sell some put option. Given IU percentile is high, you can earn some premium that way also. Make sure you don't sell it above 45-50 days in the future. Make sure date to expiration is around 45 to 50. And from a DMI perspective, looks like they had a positive crossover here. The blue line crossed over red line. That's a positive DMI crossover. That tells you there is some momentum going on with this stock, or a strength going on with this stock. Volume average is kind of not doing great. So that tells you you got to be watch out a little bit. On the contrary, check-in money flow indicator is telling you smart money is flowing into the stock. That's a good sign. So from a technical perspective, I see some nice indications here. One is DMI, other one is RSI trying to stabilize, and check-in money flow trying to at least go up. Smart money is flowing into the stock. So with that, I would buy this company stock, or I would also, sell some premium or a put option below the stock price and go from there. Next is Clover Health Investments, ticker symbol CLOV, one of the favorite meme stock, as you all know. It's a Medicare Advantage insurer. They provide a platform. They also help to maintain health plans for Medicare eligible consumers. As you can see, they got nothing much to show here. They got earnings per share negative. They got 35 million in sales, and our shares outstanding is increasing a little bit red flag for me, given that it's very less sales at this time. From a news perspective, looks like they're expanding their plans into 101 new market. That's always good. Obamacare is surviving, so this being a Medicare type company, I think that's the good news for them. So overall, I don't see too much negative news here. I think this company is pulling along, as we can see here. And from a fundamental perspective, sales is good, $35 million. And there is no margin at this time. From a gross margin is zero, as you can see here. Still not making money. Net margin is negative. High valuation, and they've been off for last 2 weeks and last 1 day. This is when I buy slowly, accumulate nice position. This clover typically gets into this short squeeze once in a while, and then take it from there. And nice volume, as you can see here, in 1 day 50 million shares transacted. Average 3-month volume is 52 million. That tells you there is a lot of interest in this stock. People buy and sell this stock like crazy. So that's why I would buy this on a weaker day, or when it's down like last Friday, and hold it for a while. And as you see here, they're above their 20-day moving average, they're above their 50-day moving average, and they're below their 200-day moving 120, and they're above 120-day moving average, as well as about 200-day moving average. So stock is kind of doing okay. It's in a positive trend, as you can see here. Now let's look from a technical perspective. This stock, as you see here, they got earning here. Stock traded kind of sideways and then went up. Earnings again, short squeeze, went all the way up. Now they're here. So they're above their moving average, as you can see here. This is 9-day, 20-day, 50-day. They're kind of bouncing off of their 9-day moving average here. RSI is pretty midpoint here, 54. It's okay to buy moderately. And implied vol is 61. So even if you want to sell some put option below the current stock price, you could do that and get some nice put premium here, or option premium. From a DMI perspective, it's bullish. The blue line is above red line. Distance is pretty significant. So it's a bullish indicator at this time. Volume, on the balance volume is also nice. Check-in money flow is stable to down a little bit. It's understandable when the stock is falling off. Typically, sometimes check-in money flow indicates a little bit downward, momentum. So with that, I would buy slowly into this accumulation, into this weakness here, and wait for a short squeeze. Next is Tattooed Chef. This is a plant-based food company, and they sell a portfolio of frozen foods. As you can see here, ready to cook bowls, zucchini, spirals, rice, cauliflower, and so on and so forth. And I think it's a pretty neat company. It's really, they can help sell these plant-based food. It's a good cause, and many of these millennials and younger generation, love to eat plant-based food of late. And they got positive earnings per share. That's good. They got positive sales. That's good. And only red flag I would see is here is they got a lot of shares outstanding that went up. I think they might have done some offering, secondary offering or something along those lines back in 2020. From a positive news perspective, Motley Fool is wondering, is this going to be next Beyond Meat? I think that's a good indicator here. People are really wondering this can become the next Beyond Meat. And they also looks like stock is down right now, looking delicious right now to buy. And they also launch vegetable products in whole food market. That's also a very good indication here. And if you look at the stock itself, it's a $19 stock. They got nice $168 million in sales. That's good. Good gross margin, nice net margin. So it's really making money. Low debt, it's just $2 million debt. That's a good story. A lot of cash, as you can see here. And stock has been down in last 1 month, 2 month, 2 week, 1 week, and 1 day. I would take advantage of this downturn here also take advantage of high short position here. I would buy some stock, keep adding to my position slowly, and wait for a nice short squeeze as you go forward. As you look at volume here, very nice volume. Not as good as Clover, but still nice volume here. 2.9 million in on Friday. Average 1.6 million in last 3 months. Nice cash. Cash flow is negative at this point, which is okay. And they've been below their 20-day moving average, just above their 50-day moving average. And I think they're below their 120 and 200-day moving average. I would take advantage of this weakness here and buy the stock. ROA is also positive. That tells you company is doing okay from a profitability perspective. Both ROA and ROE both are positive. That's good. So with that, I'm comfortable to buy some Tattooed Chef here and add to my position. From a technical perspective, as you can see here, this stock has got life. It's not just a stock that's trading in this sideways for a long time. It goes up and down. As you can see, a stock went up, stable, came down, went up, stabilized, came down. Now we're trying to search for direction here to see where to go from this point. And RSI tells you pretty stable here. Implied wall is low. I would not sell any premium here given IV percentile is 35.2. And as you scan through here from a DMI perspective, right now it's a positive because the blue line here is above red line. The distance is not too much. I would like to see the distance increase here and blue line go up further, red line come down further. Right now it's mildly bullish, and I would watch a little bit. And from a volume average perspective on the balance volume, it's down at this time. As you can see here, line is kind of going down here, and check-in money flow is also going down. So for this stock right now, you got to be a contrarian to buy. The chart is ugly. Typically, that's when I like to buy and initiate a small position, and keep adding to the position as you go forward. Next is GoodRx Holding, ticker symbol GDRX. They enable platform for the consumers to compare the prices and save on the prescription drug purchases. And they got this price comparison platform. As you can see, your earnings per share is negative, which is understandable. Sales is picking up. I love this clip here. Nice sales clip here. And shares outstanding is kind of coming stable to coming down. That's a good news here. And from a news perspective, looks like GoodRx is changing the economics of business healthcare. That's good to know. And they're taking on Amazon with prescription discounts. I think overall, positive news here. From a fundamental perspective, as you can see here, $37 stock. They had been falling off last 1 week, 1 day. So I would buy slowly into this weakness here. Given RSI is 59, you can moderately buy at this time. They're down 42% from 52-week high. Nice trading volume, so I think it's pretty good. You can trade in and out. And nice cash. They got a lot of cash. They also have a lot of debt here. That's why debt to equity ratio is 0.9. So I would be a little bit watching out a little bit. It's a little bit red flag for me given it's a little bit higher debt to equity ratio, but not too bad. They do have positive cash flow. As you scan through this here, they are below their 20-day moving average, above their 50-day moving average. They are also below their 120 and 200-day moving average. So with that, they got nice cash flow. That's good. I would buy this company on this temporary weakness and accumulate as you go forward. And from a technical perspective, as you can see here, this chart has got movements. It goes up and down. That's always good for traders. And right now it's trying to see where to go, kind of stabilizing, forming a nice base, as you can see here. RSI perspective, it's stabilizing. That's good to know. RSI is 49. It's oversold at this time. Good to buy. IV percentile is 53. If you want to sell some put option here below the stock price, you could do that. You'll get some nice premium given it's above 50. From a DMI perspective, right now it's I think it's a bearish crossover coming up here. The red line is trying to cross over blue line. There's a bearish crossover. That's why I would, buy moderately here. There may be a little more pullback coming for this stock, given there is a, bearish crossover in the works. On the balance, volume is pretty stable. Check-in money flow is indicating money is flowing out. I would buy this, moderately. I would not buy too much at this point, given there is some bearishness indicators forming, at least DMI perspective. So with that, let's look at one more here. Aspara Women's Health, AWH. They basically help physicians to diagnose, treat, enhance gynecologic health outcomes for women. I think it's a great cause, great company. And from an earnings per share perspective, it's negative. Right now, I think they're trying to improve or stabilize. That's good. Nice sales. I love this sales improving. Off late, it's a little bit stable, which is okay. Still, still there is a positive growth here. Shares outstanding is increasing. This is where these early stage companies, they want working capital. That's why they kind of keep giving out some stocks as we go forward. That's why number of stocks outstanding is increasing, which is okay for these type of early stage companies. There are some positive news here. I think they release health releases analytical and initial clinical validation for their one of their indications in the ASCO conference. That's good. It's one of the 35 best ideas per Access Wire. I think people are wondering, do they use too much debt in a risky way? But looking through this year, they have just $5 million debt, not too much, and they got nice cash, which is okay. And overall, I think it's okay. I like the company. There is some temporary weakness here. From a fundamental perspective, $5 stock, it's not too much at all. It's a small dollar amount. Nice market cap, 653 million. They got $5 million in sales. Very early stage company. Sales growth is good from a 5-year and quarter-over-quarter perspective. Nice gross margin. I love that. A little bit expensive from a price to sales perspective. From a valuation perspective, a little high. Off late, they've been pulling off in 2 week and 1 day. I would buy into this weakness. Given it's a low dollar stock, I would accumulate slowly and form a nice position and take advantage of this short scenario here and hope for a short squeeze as we go forward. This is when because there is a positive sales growth, I don't feel bad to accumulate. It's a fundamentally good company. A temporary weakness, high short ratio, I would accumulate. From a volume perspective, I think they got pretty okay sizable volume here. Last Friday, for 2.4 million shares traded. Average volume is 527, which is not bad. Nice cash, low debt. As you scan through here, they're doing okay. They're above their 20 and 50-day moving average, and they're below their 120 and even I think they're below their 120-day moving average, but about 200-day moving average, which is good. And they've done nicely for 10 years. It's not a fluke stock. It's done nicely for 10 years, 5 years, 1 year. So you can make money. This is not a money down the drain. You could always accumulate this low dollar stock and hope for some good FDA approvals, and then this stock can go further up. It's a safe bet. So with that, we look at the technicals here. As you see, a very steady idea. Stock has been going up nicely, kind of coming down a little bit. Now it's trying to make its way up as we go forward. Nice RSI, RSI is 49, tells you it's okay to buy and accumulate at this time. Implied vol, it's right now it's 11. I would not suggest selling any put premium here, but if you want to buy some call options, you can, but I would not buy call option. Given stock is at very low price, I would just buy accumulate stock. It's much better option here. You don't want to risk any time premium here. Just buy the stock outright. And DMI, as you can see here, there's a bullish crossover that tells you, there's it's a bullish crossover right now. It can go further higher. On the balance volume is nice clip here. I love this. It's going up and up. I think it's came down a little bit because there is some temporary weakness here, which is understandable. Smart money is flowing into the stock, which is always good. So with that, I would go jump in and buy some stock, accumulate this. A nice stock, great cost. I think long term it has done nicely. So with that, thank you very much. Happy investing and trading. Please subscribe.